Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that it overall improves our financial success. Welcome to another episode. This episode's more about business cash flow, the importance of business cash flow. I did an episode not too long ago in relation to cash flow and the importance of it and the mindset, the importance of the mindset to it. But in this episode, I'm going to go over the simple things that what we can do practically in a business, as apart from developing a good mindset for your business. It's also ways to sort of help with your cash flow and improve it if cash flow is an issue at the moment for businesses, companies, to whatever situation you're in. It could also be cash flow with investments, but realistically, this is probably more orientated towards businesses. Self-employed, it's probably some good tips too if you ever think about getting a business or opening a business. Those of you that have never run a business or thinking about buying or developing or starting off a business or as a second sort of thing outside of your current job, to earn some extra income, that sort of stuff. It's important to have little fundamental ideas upon cash flow. Don't always assume that cash flow comes in when you have a business and clients have to pay. Sometimes, even when it's up front, there could be issues implemented within your budgeting. So I suppose what you want to do, if those of you that are thinking about starting or are currently operating a business, I'll just go over some key areas that I think will sort of help in this instance. The first one is just to sort of craft a budget or monitor cash flow. Cash flow will improve your business straight away. It's sort of, you got to start with a budget. A budget will serve as pretty much like a roadmap for your anticipated income and expenses like taxes, paying off things as in invoices as you receive them, right? So creating a budget always ensures that businesses can plan, allocate resources effectively, right? And that sufficient funds are available to cover operational costs. So, all that type of stuff, everyday sort of costs, your investments and any other unexpected expenses, which could range from taxes, debtors that you didn't really know that were there or so on. So that's always handy to know. You can always develop a budget based on historical sort of data that you've collected. It's not just a pie in the sky, look, this is what I'm going to say. I'd always look back at your data, last year's financials, have a look at who's paying, who's not paying, that sort of stuff. Just really industry benchmarks. So the industry that you're in, there will always be a sort of certain industry benchmark. A cafe is going to be different to an engineering or printing company, that sort of thing, and sort of project the growth or changes in the business landscape. So for instance, if you're going to think that your business is going to sort of change in the next couple months or years, sort of plan for that and make the budget in accordance to that. So once you analyse all your data, you anticipate where your business is going, it's always nice to know sort of if you can forecast that landscape for the budget, so there's no hidden sort of costs or expenses that just pop out of the blue, right? This is especially goes for tax bills. So if it's GST or, future taxes, provisional taxes are both the same thing. All that sort of business, right? So now, budgeting alone is probably not the only thing. A regular monitoring sort of and comparing the actual cash flow against sort of budgeted figures are pretty much very important, I'd always say. It allows your business to identify variances, pinpoint areas of concern. It promptly adjusts their strategies if necessary. So a good budget management solution will always help, especially if it's consistently that you're monitoring this budget. Make sure that your budget management system is monitored by you. If you've got accounts, make sure that you sort of have a one-on-one or one-on-two meetings about it, that sort of thing. How's it all going? Who's paying? Who's not paying? That sort of stuff. And really keep a good eye on it. I always say, we have a lot of meetings for sales teams and stuff like that, but we should also have a lot of meetings for your admin or your staff or your accountant, that sort of stuff. Keep a finger on the pulse, especially when it comes to the budget management sort of solutions that you're trying to implement in your business. It's sort of the other thing, the second point is sort of to make sure that with the inventory, so making sure that all your cash flow is sort of not tied up in spots where it shouldn't be. So sometimes a lot of people may have it in assets or tools and equipment where a lot of the cash could be stored in these tools where you could have taken a loan out, allocated that cash elsewhere that could have assisted with business cash flow, advertising, that sort of stuff. If it's a spike in marketing costs, that sort of stuff. Just really make sure that that's really taken care of, and make sure that the cash that could be used for cash flow isn't stuck into other places where it shouldn't be, or bad debts, that sort of stuff, which sort of leads me on to the third point of collecting receivables faster. And what that basically means is to make sure that when you do have open invoices out to all your clients, make sure that your team or yourself are there collecting the money that's owed to the business a lot faster. Believe it or not, if you're like a 30-day business or a 60-day business, or even 90 to 120 days, that starts escalating out and not in accordance to your budgeting or your planning or your sort of cash flow management system, that can really affect it. So really tidy that up. It is a hard thing to do. Most of the time with a lot of businesses, I have a lot of problems with trying to get loans for businesses that they sort of are not collecting their businesses. So a lot of the time, if I'm doing invoice factoring finance, which basically means that we get finance upon the invoices that are actually owed to your clients on a general way of sort of financing it. So what that means is basically if you've got 100,000 outstanding with invoices, we use that 100,000 outstanding to get the finance based upon those figures, meaning that could also assist with cash flow as well. But it's probably not favourable. I'd always say it's better to get a loan to help with other things, as in such as assets, tools, machinery, that sort of stuff, rather than just cash flow. And that's where it sort of goes back to that point which I made just before, not to have your cash tied up into assets as much, and to really make sure that you refine that. If you are able to get a secured loan, which is a lot cheaper than an unsecured loan, make sure you do that based upon the asset, and speak to your broker about that. So collecting your receivables a lot faster is really an important part of your business. It's also, make sure that you are setting clear invoicing terms too. Sometimes invoices can be rather confusing, and people look at it for literally 3 or 4 seconds to try and navigate it when they receive it to pay it. And sometimes if they're too hard or complicated to read, they sort of say, well, leave it on the back burner. Make it encouraging. So when someone receives an invoice, pretty self-explanatory, 30 days, 60 days, the amount to whom they've got to pay. The bank details are there in large open numbers and letters. Obviously, the font has to be very simple to read. So yes, it's great to have a nice, good-looking invoice or anything like that to help with marketing, but most of all, make your invoices very legible. And sort of sometimes, I mean, I don't really like saying this, but sometimes with your bad payers, like for clients that are really late and are always late and there's always excuses, stuff like that, you could probably implement like a payment penalty type of thing. So a lot of the time they may put a 5% interest rate on there or a 10%, depending on what you feel is appropriate in your industry. If for those late payers, that often helps bring sort of money in a lot faster, but then you could lose the client too as well. They'd sort of say, well, your competitors aren't sort of charging me default interest rates, so why should I stay with you? That sort of thing. That I always believe is somewhere around the pricing. So make sure that your pricing is effective. And make sure that they understand the terms and conditions, that there are default rates obviously associated or penalties or things like that. Like you can work it out as a percentage cost or just as a fixed sort of cost per month, if it's a $10 fee per month or something to that degree, right? That's just purely an example. Now, to number 4, I said was to negotiate favourable payment terms with your vendors. So it's a great strategy for Cashflow to negotiate favourable terms with your vendors. The more time you have to pay your vendors, so for instance, the longer you can keep your cash on hand, it enables you to sort of have more cash within your business. It allows you to allocate funds more strategically and mitigate any sort of potential cash shortages if that's the case. So negotiate the leverage of your value as a customer by sort of highlighting that you are going to be in this relationship of business for a long term. It's a long-term partnership between you guys. So really emphasize the fact that you're a loyal client, and that sometimes, things do tend to sort of hit the cash flow like it all does. Every business owner understands that. And I mean, it doesn't have to be with all your vendors. It can also be something that with some of your vendors, like your major sort of higher invoice amounts, that sort of stuff, where it really can help with retaining a bit of cash within the business. It's crucial to maintain a respectful sort of and collaborate approach during the negotiations as a positive vendor, right? It's essential that you keep the long-term success of your partnership in business. So don't go overboard by asking for discounts and that too much. I mean, obviously you're going to get what you pay for, right? So if you've got a vendor that's sort of happy to do sort of a slight discount or a slight increase on terms when you have to pay their invoices, don't always push it over the edge. Understand read the room in the relationship, understand they're doing you a favor and it will help with cash flow, that sort of stuff. And just carefully balancing cash flow outflows through negotiating payment terms will help businesses better manage their cash flow. So it just sort of reduces financial strain, and it enables you to have more cash, once again, to allocate those resources for things like growth, marketing, operational objectives, that sort of stuff, right? So now the 5th point was to automate your financial processes. So one of the most impactful ways to improve cash flow management is by automating financial processes. I mean, it's pretty self-evident, but a lot of people don't do it. It's just something that I believe that should be sort of slightly implemented into your business. If it's something that is done overnight, it can sometimes confuse a lot of your team or yourself. New systems, for instance, CRMs, that sort of stuff, invoicing programs. Implement it slowly. I mean, obviously there's always going to be a turning point where you got to implement, software and stuff like that. But I like to understand that when you start to automate the financial process. So, for instance, you may be sending your invoices just on an old-fashioned Word document or a PDF and then just emailing it across. Maybe get onto other platforms. As you know, there's invoices where you literally you can do it all in the one-stop shop, and your accountant or bookkeeper can show you all that. The manually entering data, processing invoices and paying bills is always time consuming, right? So I always say that to automate a financial process saves your team a lot of time or yourself a lot of time, depending on who's actually doing the invoicing and the financials. When you embrace the automation, the whole business starts to embrace the automation sort of thing. It's businesses start to streamline their processes, which obviously saves a lot of time, and it improves accuracy upon all your finances. A lot of the software these days is so well in tune with the business. You literally connect it to your bank account and have it seamlessly send out pay invoices, that sort of stuff. Read your bank statements. It enables you to really have a good overlook of your entire business transactions, as in money in, money out, cash flow, that sort of stuff. So I would always emphasize automating a financial process to be implemented sooner than later. And also it attracts better employees, right? I mean, the more automation that you have in your business, employers are just attracted to up and coming businesses that are really willing to automate their processes internally, especially in the office. If you've got a manufacturing business and you're in between manufacturing, in between the office as an owner business, and you find it very hard to automate things in the financial processes, sometimes have a contractor or a bookkeeper that can often help, or an accounting firm that can do that, that sort of thing. Now, also, if you can, this is also it is a bit of an old school way of doing banking, but it has retained its efficiency. It's called a line of credit. If you can secure a line of credit with your business, I think it helps a lot. Line of credit is basically, it's having a line of credit, literally like a credit card for the business, that you can float and pay invoices, receive money, put it back into the credit, allocate funds for certain things. So a line of credit of, call it $100,000. You've got open invoices for $50,000. You can helps you retain a lot of the cash, and you can see money going in, money going out. And a good bank will be able to facilitate that, or speak to your broker once again, to speak to multiple banks or fund providers there to be able to provide line of credits. They're quite easy to apply for, so your broker wouldn't really have a lot of problem doing it. I do know that there are a lot of asset brokers or business brokers that find, look, they're not as available as what mortgage brokers are, but there are some good business brokers around, as in asset brokers, and they can help you negotiate terms with a lot of the banks out there or funders. And there's also a lot of banks out there that enable you to have a line of credit and other facilities that are joint there, right? So what you really want to do is speak to your banks or your broker to say, look, this is what I would really love. This is my wish list. And if you can get me this, really good. But if you've got 5 particular things that you'd like to help with your banking for your business, and look, Bank A, B, and C can only do 1 or 2 or 3 or 4 of those, tick off and really start to pressure test those banks. Just don't stick to a bank because you're familiar with them. I find quite often when I'm doing a lot of the asset funding or business funding for a lot of my clients, they tend to like staying with the bank that they know, saying that, they're loyal clients or loyal customers. In this day and age, and I'm pretty much the same thing. I always used to stick to a particular bank that I was always familiar with many years ago. Then I started to find out that they really weren't looking after me. Some do, depending on what sort of assets or liabilities you have with the bank in that particular business or under your personal profile. But really, don't just stay with the bank if you think, you're being loyal and you're doing the right thing by them. Do the right thing by your business. Have that attitude. I'm not saying just walk away, but have negotiating terms with the bank. Maybe speak to your broker or your accountant, the guys that actually are familiar with your bank or can be more familiar with the transactions, the business, the ethos and the manufacturing of your business. I mean, how does your business operate? And a good broker or accountant will really get their hands, deep in with making sure that these things are, like as in the line of credit, are put into place. It is a great way to do things. A lot of the time when a lot of my clients are applying for a line of credit or we apply their line of credit for them, they tend to sort of worry a lot. For some reason, and I get it, they've often tried to get a line of credit with a bank or been declined, or there's been problems in the past and it's sort of caught up with them in their attempts to get more sort of funding done. But please, by all means, speak to your broker or your bank about the issues of concern that you may have. Sometimes these issues, what I always find, can be worked around, especially with the unsecured lending. There are institutions out there that your broker will know about that they can actually negotiate these terms, right? So don't always think, look, I've got, the business hasn't been going that well. There's a lot of ways that we can actually get funding for you in that case. And if you aren't able to secure a line of credit, what I would be doing is speaking to your broker or, once again, your accountant to make sure that you can actually line the figures up into making sure that your bank statements and everything that's needed for applying for a line of credit is put into place. And over time, as you're still operating your business, you start to clean your finances and you start to clean up everything that the bank would be looking for. So therefore, eventually you will get that line of credit. Going back to the earlier point where I say, well, what you want to do is sort of have more cash floating within the business itself for other things. So a line of credit, for instance, how I was saying before that you could have cash stored in your assets, or too much cash that stored in your assets where that cash could be in the business. What the line of credit does is it sort of gives you a bit of a turbocharge into having a more funds in the business and being able to maybe place more marketing in the business, so increasing turnover and profit, right? So if you are able to secure an $80,000 line of credit or whatever that may be, and you want to increase your marketing of, call it $5,000 a month, and you know that you can afford it, that sort of stuff, that line of credit's really going to help ramp up your business. And accordingly, as you increase your marketing, obviously, hopefully you increase your turnover and profit. That reflects within your figures. And once again, your bank or broker should be able to negotiate better terms, as in if you did need a higher line of credit and so on and so forth. And that's how you build it, right? Now, the other thing was point 7, where analysing and mitigating the cash flow risks that are associated with the business. So it's in relation to a line of credit or cash flow, that sort of stuff. But what you really want to do is make sure that you've got a proactive approach to protect your cash and maintain sort of that financial stability, which is identifying, mitigating potential risks, right? That's within your business. This is crucial, I reckon, because especially if you've got external factors like economic downturns, customers defaulting, or supply chain disruptions. This can really affect your ability to generate and manage cash flows. So, for instance, economic downturns may mean that, look, sales are down for whatever reason. You might have a client that goes bad or can't pay for whatever reason. And it only takes one or two for this to catch up. So what I always say is, if you do sort of start to have more cash reserve in the business, this will help you sort of retain and sort of mitigate cash flow, or analyze it, right? And sort of start to understand, even if you can increase it by 5% every quarter or whatever. I mean, speak to your accountant, analyze what it is what would help or what it is that could help your cash flow, and analyze it all the time. Keep a finger on the pulse, right? Sales is great. We all, as business owners, keep a finger on the pulse for sales and marketing, but it's also analysing and mitigating the cash flow risk. So to sort of minimise cash flow risk, obviously we've got to build that cash reserve, and diversify customer base. If you're only dealing with people within your state or suburbs, maybe think about venturing out geographically. On the internet, you may be able to do sales if that sort of stuff. You could also sort of have securing backup suppliers. So, for instance, if a supplier tends to let you down in occasions, maybe diversify and use multiple suppliers for that. And explain to your current supplier, especially if you've got a great relationship, look, sometimes the supply of your goods isn't always up to standard or could be late. My apologies, but I must have another second supplier. Negotiate it with them. They'll understand. Business is business, of course. And if it's affecting your cash flow from manufacturing or servicing and it's sort of letting you down, it's the supply chain of things, it's very important that you got to keep your sort of productivity up, right? So, what I would also do is sort of always develop a contingency plan, stress test the financial projections. So, for instance, if you say, look, if I was, for instance, going to have a downturn of 10% in the next quarter of sales or something, are you able to carry that as in the cash flow? If 10% drops down in the what's getting paid in your bank account, that sort of stuff, really pressure test it and have a contingency of, look, depending on the business, a contingency buffer of some companies I know run a 2% contingency, 5%, 10%, 20%. Some businesses really go overboard with contingencies. Not to say that it's not a bad thing to be overcautious, but to sort of what I tend to find with people or businesses that are overcautious, they don't have a good finger on the pulse or a good team to be able to have meetings and analyse why they have to have a high contingency. So long as that contingency doesn't store cash elsewhere where, for in case of an emergency fund, a lot of people do that with GST. So they'll create another bank account with their GST component to be paid every quarter or every month, whatever it may be, for the tax department, simply because they've been caught out many a time. Yes and no, I sort of tend to agree it's a great way, but if you're good at doing everything else, like, having a contingency in your sort of processes, and like all the other points that have just been going through, you tend to not really need that bank account. It's up to you guys. Look, whatever floats your boat as a business owner, whatever you feel comfortable with. The last thing I want to be doing is sort of trying to encourage you to do things that you're not comfortable with. I'm not saying don't change, but I'm saying, like, sometimes it's good to sort of see how other people do it. Once again, you can speak to your accountant what he may recommend if he knows your business or she knows your business quite well, and sort of, speak to the professionals, even your broker should know, or your business coach, right? And look, the last thing, I suppose, of all this is to sort of make sure that you have a regular review and update your cash flow management plan. Just don't make a plan one day and let it set and forget. As your business grows, as your income grows, as your client base differs or grows, and as everything sort of starts to evolve in your business, sometimes businesses can evolve in magnitude, as in higher income and not necessarily higher team sort of employment. But some other businesses are really employment heavy. There could be a franchise, could be anything, right? But make sure that even though your business to you sees like it stays the same, but it is growing. Your business is pretty much like children, right? You always see them as young. Like you have your first child, you see them as a baby and they grow up, and they're young little adults, but you still see them as young, right? And sometimes us as business owners are the same thing. See our business as something, but just like your kids, their needs change as they get older, and so too do your businesses in that. So always make sure that you a regular review and update on your cash flow management plan is so important, only because it's sort of like just keeping up with everything that you're doing in the business, right? So just to revise what I've just been saying, always craft a budget and monitor your cash flow is number one. Sort of implement efficient inventory management. Make sure that you're all over it. The collect the receivables faster often helps. Don't break any relationships by enforcing these collections faster, but negotiate it, right? Do what you do best with business, and business is all about negotiating and finding that balance point. Number 4 was to negotiate favourable payment terms with your vendors. So that is really a good one, and it also creates better relationships with clients and suppliers. Automating your financial processes always attracts the better employees, makes your business breathe better. It enables you to read the business better, save you time instead of going through multiples, could be Excel sheets everywhere. You could just implement it with one. Automation is great in any instance. I always recommend to look at automation. Securing a line of credit, guys, I think is a must. Some people may argue with me. Guys, when it comes to a line of credit, just don't take what you're given. Sometimes a line of credit you're paying too much interest, right? So make sure that when you do this line of credit, there's no use doing all these other points that I've just read out and then getting a line of credit that's charging a ridiculous interest rate. Speak to your broker. Emphasize, get that broker to do what they do best. Business mentors or brokers really should be reading in between the lines and understanding your business. There is nothing worse than just a broker that slugs you for commission and does not understand your business and provides you with products that does not suit the business. So speak to them and speak to your accountant and double check it. I know that I harp on about it and you go, oh, look, I don't really have time to do this, but it's very important, guys. Very, very important. Now, the next one was to analyze and mitigate cash flow risk. So just make sure that you're all over it into building the cash reserve and diversifying your client base, that sort of thing, right? Mitigate it as in increase your suppliers, that sort of stuff. Create a bit of a choice when it comes to your business operations. And the last point was always make sure that you have a regular review and update your cash flow management plan for your business as it grows, as it shrinks, as it does whatever it does. Always make sure that flow or management plan that you've got in place for cash flow is in accordance to the business and it sort of suits you. The accountant is all over it. He understands why you're doing what you do. Sometimes, look, I don't like relying heavily on accountants, depending on where you are in your business with your accountant. You've got to understand your accountant has so many clients that sometimes if you're not the most important client to them or you feel as though that's not it, I would tend to sort of, look, you're not alone. There's so many other professionals or accountants or other professionals as in brokers, anything that can help you with your business. Don't always rely on one perspective of a professional. Rely on multiple perspectives. You as a business owner, it's your responsibility to make sure that the cash flow is up. Those of you who are starting a business sort of don't really need all this information. It's great to sort of replay or find out about these type of things or keep it as a second nature, right? Generating income is probably the most important thing, but cash flow is king. I always emphasize that cash flow is probably more important than profit in most of the instances, simply because it's a bit like if, let's say, for instance, you're breathing, and if you're taking in big, deep breaths and you compare breaths as profit or income, you take a massive amounts of income. But if you don't make your breathing regular, everything else in your body starts to sort of dysfunction. Your blood pressure goes up, that sort of stuff, right? So your business is pretty much the same. Peaks and troughs, or try and minimize peaks and troughs in cash flow. I think cash flow, if you can really steady it or make sure that there's a nice reserve there, comfortable reserve to stop you from getting anxiety, that sort of stuff. Always remember that you're in the business to minimize anxiety, not create anxiety. So if you keep all these sort of things in place in your business, it can really help ease that cash flow in and that breathing to be, steady. I really hope that helps the episode. Look, if I have missed something, my apologies. Please let me know. If there's something here that you think that would help with anything in the episode, or I could point out or discuss, please let me know. And I'll see you on the next episode, guys. Thank you.